This is an enormous mistake that people make, and it is one of the single greatest mistakes that we were able to avoid while building a number of extremely expensive businesses along the way. And let's face it, building businesses is very expensive. Businesses cost money, and you should expect them to cost money. If you are trying to avoid growing your expense category inside your businesses, then frankly, you don't have a real business. What you have is a job that you built yourself. You are your own boss, and being your own boss is fine, but the moment you stop, you also, in most cases, stop getting paid. What we're trying to do is actually create a fully functional business, a business that we can scale, a business that we can hire people and delegate, businesses that require space in many situations, businesses that require technological upgrades, computers, devices like this. In some cases, it requires automobiles. For other people, it might require other types of equipment. It requires software upgrades. And of course, personnel. And this stuff is all very expensive. If you're trying to build a real business, the goal should be that those businesses will get more and more and more expensive over time. And that's kind of a paradigm shift mentally that we can go into in another video. But once you accept that fact, you have to start to account for these expenses as cleanly and safely as possible. And what I see is that a lot of people make the cardinal mistake of using their personal credit card availability to build their business, to fund their businesses. And this is something that you should avoid at all costs. Now, first, you should understand that getting access to a business credit card instead can often be just as easy, if not easier, than accessing a personal credit card account. After you set up your business entity, and you should be exploring whether to set up an LLC or incorporate an actual corporation, make sure you're planning properly for future tax consequences in order to make that decision. Then use that business name along with that tax identification number, which you can easily get by filling out, I believe, the SS4 form with the IRS. That tax ID number will entitle you to business credit card accounts. When you set up business bank accounts, banks will oftentimes offer you business credit cards associated with those accounts also. So you'll get a business name on the credit card account, and there are a number of really terrific benefits that are going to come by doing it this way versus using your personal credit card accounts to fund your business. Number one, and in my opinion, in many ways, the most important is that it's going to hide it from your personal credit report. When people use a personal credit card to fund their business, even if you're paying off that credit card in full each month, that account will often be reporting that utilization when the statement closing date passes to the credit bureaus, therefore affecting 30% of your credit scores. 30% of your credit scores are determined by how much you're using based on what's available to you on your revolving unsecured credit accounts. Now, when you use a business credit card instead, it actually hides all of that activity from your credit report. Almost all business credit card accounts are invisible to your personal credit report, even though most of the time you do personally guarantee it. So when I set up a business credit card account, even though I'm using a tax identification number that is associated, and even though there's a business name on that account, I'm also providing access to my personal credit social security number, and I am personally guaranteeing that if the business does not pay that credit card, I instead will. And so even though I'm personally guaranteeing this account, I am instead not showing, it is not reporting to my personal credit report unless I default on that borrowed money. So if I don't make payments, then they don't show that default or credit trade line to the bureaus, which means that I can spend everything that's available to me without having any impact on my credit at all. This is a really, really important step, especially if you plan on revolving some of your debt from one month to the next. The risks are more minimal if you're paying it in full each month, because you can just pay earlier than the statement closing date and avoid the utilization you've spent for that month to be reported prior to you paying it off. However, if you do plan to revolve from one month to the next because you need that extra leverage in order to afford the business decisions that you're investing into, it's going to be all that much more important that you are using business credit card accounts instead of personal credit card accounts. So I always like to be really transparent with you guys. I think using personal examples is as helpful as it gets. In my Chase account, which is just one of the many banks that we're using at the moment, we use Chase, we use Wells Fargo, we use BBVA Compass, we use KeyBank, we use Public Service Credit Union, we use Elevations Credit Union. Those are just some of the banks that we're currently relying on at this particular moment in time. In our Chase Bank account, you can see that we do currently have a credit card balance of $38,693. Now you can see that the cash is sitting there, $39,141 to pay this account in full, which is what we'll do to avoid interest this month. But do make sure that you watch an upcoming video that we're going to be releasing talking about how I could pay this off if I didn't have any money in order to avoid most of that 22% interest rate that's associated with this account. This account is a total of 22.24% interest. So we do want to make sure that we avoid that cost. Now, with that in mind, let's go ahead and take a look at the Credit Karma account in order to get a sense of what impact this is having on my credit. And what you'll see here is that in spite of having a $38,000 balance, we currently have a $0 amount reported to credit. So our credit cards are currently paid in full, no other debts associated with this credit file, which is why our current credit scores are hovering at the mid 800s, 820 plus, almost 830 is our current Vantage credit scoring. Now our FICO scores are coming in very close to that, although due to some recent inquiries and because I'm going to be pursuing the acquisition of additional debt weapons coming up, because we are managing our credit with business credit, it will be a lot easier to get access to those accounts and our credit scores will not feel the impact as they would if we were relying on personal credit cards in order to fund our business. We use tens of thousands of dollars every single month to build our businesses. This $38,000 is money that we've spent in the last 30 days just to build out that short-term rental property and get it adequately furnished and put the amenities that we desire into that property to get the highest amount of nightly rates. So this is a very exciting time, but it's extremely expensive. And in order to do this the right way, we cannot have our personal credit accounts associated so that we can easily walk into the banks and continue to be considered VIP customers to them. So guys, that does it for today's video. Please be sure to reference creditcards.com in order to explore the best current offers for both personal and business credit card accounts. What you'll find with business credit cards is that they too come with some of the best promotional interest rates, 0% offers, great rewards, cash back, and also make sure you tune in to our upcoming videos, which will show how Chase has decided to contribute multiple thousands of dollars towards our short-term rental property. We do appreciate that so much. I'm going to show you guys exactly how that happened and why Dave Ramsey has it wrong related to credit cards. So be sure you're a subscriber, turn on your post notifications bell, drop a like on this video if you want me to continue to give you tips and tricks on best practices when it comes to borrowing money, using your credit cards and lines of credit the right way. For those of you that are commenting below, please let me know how many current credit cards are you currently using in order to keep your bookkeeping straight and keep your credit on track. We'll look forward to seeing you on the next video. Until then, make it a great day today and take care. Alrighty, so I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use. And it's quick to navigate. So let's go ahead and walk through that process together. The first thing you'll do is in the search menu, you'll go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy and go ahead and select the red button. Immediately it'll pull up the download button, which will open a new Cash Flow Cruncher spreadsheet. Now you can see I've already got a copy open and enlarged here for you to see. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here. And it'll start with the revenue and assets page. On this page, you'll want to itemize each individual income that you bring into the household or the business. Now, it's always been my recommendation that you create an individual cash flow cruncher for your businesses, an individual cash flow cruncher for your real estate, and an individual cash flow cruncher for your household.